Hey guys, this is Andrew for TRENDLINES.com. So in this video, I would like to make a big update, guys, on GameStop. It's been a while. I haven't talked about GME because nothing much was happening, but I think we have an interesting situation. So I want to talk about it as I will do every time I'm going to see an interesting situation. So let's get into it and see what the charts are telling us. All right, so let's take a step back, guys. So I'm on the daily time frame. I want to show you two things here. So the first thing I want to show you is that we are bullish, right? Because what is the definition of a bull market is making higher highs, higher lows, and trading above the moving averages. So we are making here definitely higher lows. We are not able to make higher highs since Feb 21, I mean Jan 21, end of Jan, which means we are in a corrective phase since January 21. Okay, that are labeled A, B, C, D, E according to ELLIOTT wave theory. That is telling me this might be a huge triangle, guys, that often happen in false waves, so that makes sense. And potentially if we have an upside breakout, so I see the breakout level on my hand around 250, then this would be the signal that the fifth wave is coming. All right. And what is interesting to see, so like I said, guys, we are bullish because we are above the moving averages. So we are actually below the 20 and the 50 period moving average, but we are above the 200-day moving average that is at 161. So I think it's pretty interesting to see that we are having actually a very nice opportunity here. So of course, there's no guarantee we hold above 162, 61, all right? But technically it's a nice entry level, and we are having, if I zoom in a little bit, guys, on the short term, we're having a breakout here, short-term breakout. We have two doji candle consecutive, so this is the confirmation of a breakout, all right? One candle in the time frame you're considering is a breakout. It can be played, but it's not confirmed. And when you have a second day above, then it's confirmed. So here, maybe we're gonna have some buying orders coming on Monday. Let me just finish on the short term. We're having here, we don't have a bullish divergence on the short term, do we? Okay, we slightly have it. All right, so you can see here the momentum is picking up. Okay, on the hourly time frame, that's not obvious. Okay, I'm checking if we have a bullish divergence. So market making lower lows, okay, from here September to end of September, and the momentum is going slightly higher. So we have a beginning of a bullish divergence, which when it's associated with the breakout is giving you a more trustful signal. Let me show you quickly, guys, the divergences. So this is the one I was referring to. Market in blue making lower lows and the momentum going higher. So this is usually bullish, but we've seen those divergences happening many times without being followed by a strong move up. So here we have the divergence on the hourly only. It's better to have it on the 4 hours time frame as well, which means that the medium-term momentum is shifting too. Here you can see the momentum is going lower on the 4 hours time frame. So this divergence is not powerful, but we have the breakout that is going with it. So it's a kind of good signal to me. I think we still might see a bit more downside, like, you know, some kind of a retest here. So I don't think, I mean, this is not a signal that is saying that on Monday we're going to go higher. It's a signal that, you know, it's looking pretty good. We might go and find some support again at the 200-day moving average. And then, you know, what we're looking for is something like this. This would be the signal that we are waiting for. Another thing I wanted to show you guys, because once again, this is a long-term game, all right? I think everybody understands that. And that's why I think it's interesting sometimes to just look at the long-term signals. And I just showed you that on the short term, we have something bullish. So let's see if we have the bullish reaction we expect. But look at the long term, we are above we're making higher lows, okay? We have an upward here support trend line that is actually, so connecting the lows here, and that is giving us a support as well at 162. So this is bullish. We have an upward support trend line. And most importantly, guys, look, it's not easy to spot, but when you are on a daily time frame, you can see that here the market made higher lows. And in the same time, the momentum was making lower lows. So this is a divergence, hidden one. I'm going to show you this right away, but just think about it twice because it's actually making a lot of sense. The momentum is shifting lower, which means that bears are in control because they have the momentum with them. And even having the momentum with them, they're not able to push the market, making a new low. So the divergence is that the momentum shifting lower, but the price action making higher lows. So this is this one, guys, hidden bullish divergence. So on the daily time frame, we have a hidden bullish divergence, and on the short term, we have a bullish regular divergence. So we have the divergences with us, we have the moving averages with us, we have the trend line with us, and we have a small breakout. So I mean, technically, it's looking good. We only miss the breakout above the orange trend line to be looking really, really great. And if this happens, let me just remind you guys, I know that some of you probably think this guy is crazy, you know, he's never gonna give up. And the truth is that maybe I would one day if things don't look good anymore, but for now they're looking good, all right? So I'm gonna keep telling you what I think might happen. So I think that what might happen is that we get this upside breakout and then we have a run to the 800 area, the 1.618 level, all right? This is Elliott wave theory that I applied to GameStop, and it gave quite good results in the past. It didn't work here, but it worked in many other waves. So I think it might work again. And what I want to show you guys here that is very important, because this is all related to what is happening on the option market and the short market. I mean, you know, this stock is still heavily shorted. So what do we see here? The regular short first, I get it here, guys, is 11%, so very stable. But the synthetic short is at 7% right now. No, sorry, GME is not at 200 yet. So the synthetic short is at 5%, but the maximum synthetic short is at 25%. So let me explain again what this means. It means that right now there is, if you compute all the options, delta, exposure, you have 5%. But if all these options are deep in the money, then the delta would be equal to 100. Okay, the delta is the exposure you have for each option. So the more in the money, the more exposure you get. And this delta would converge towards 1. And if this happens, it means GME is going, for example, I don't know, to 800. You can see that the synthetic short is converging towards the maximum synthetic short. What does it mean? It means that 20% of the float would be bought by market makers on the upside. So this is what we call gamma. Okay, this is the gamma is just the difference of delta when the spot moves up or down. And here you can see that whenever the spot moves, the synthetic short is. So let me sum up the situation. Technically, we have everything that is looking good. We have on the option market, it's more animated than almost ever. So I here record most of, okay, so on GME, I had on the 26th, sorry, so let me add this one, bam, I move it here. So this one is wrong. Okay, so you can see we have 2% more than 2 months ago. All right, so 2 months ago, the synthetic short was bigger because the spot was at 205, but the maximum synthetic short was smaller. What does it mean? It means that people still believe in it and that it is still growing. And the best way to see it is when you open it. I'm not going to go too much into detail. I just can tell you that most of the options are coming from Jan22. So from here, you can see I'm looking for the greens. So I have also here a big one and here. So, okay, let's be honest, October and November, we have a lot of options as well. So let's see if they are rolled. But the biggest one is the 950 strike on the maturity Jan22. So this means that if something is to happen, it would probably happen before Jan22, because after that, we lose the gamma. So let's see, maybe it's going to be rolled. If nothing happens, I'm still going to be there, guys, to talk about what I see and talk about what might happen. I'm here giving you the market dynamics, guys. Once again, when I talk about TA, I talk about momentum, I talk about supports and resistance, I talk about who is in control. And then I show you the synthetic short and the regular short, which is giving you the information about the gamma, so the market dynamics and who might do what in which scenario. And I can tell you that if GameStop breaks 250 on the upside, everybody's going to be buyer. So that's it for today, guys. I hope you enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. See you guys.